Hello friends, welcome to your channel FINOMENT. Today we will learn how the taxation on share market income and other investment works out in India. In earlier video we had discussed how the total income is calculated and taxation is applicable. So you can see in screen that out of total 5 heads of income, in 4 heads like salary, house property, business and other sources, the taxation is very simple. It is calculated based on the income tax slab rate provided by the government, and this slab rate changes as per the financial year by our finance minister in budget, which announced in every February. So this pertains to financial year 2021. So these 4 heads of income, salary, business, house property and other sources, calculated as per this slab rate. However, the taxation on capital gain is different. It is not calculated as per this slab rate. The taxation is very different, so we have bring it the video on it, so you can just check out. We will not discuss in detail how the slab rate looks like. First is general category, those person whose age is below 60 years, and second column is 60 year but not below 80 years, and third is more than 80 years. So taxation slab rate percentage calculated as per this slab rate. For different in category of individual, different taxation is levied. So now let's start with the capital gain tax which is applicable in India. So and put it in a simple way, that if you are getting the profit on sale of capital asset, so capital gain will arise, and on that tax will have to pay. Now what are the capital asset? So if you are doing in share market, then shares, stocks, mutual fund, bonds, these are the capital asset. Then cars, if you are owning personal car, vehicle, and if you are selling on, then capital gain will arise. Then if you are having any land, building or house property, house flat, then also if you are possessing any gold, jewelry, etc., then these are the basic examples. There are a lot of other capital asset also there. So put it in a simple way, if you are holding this asset and after selling this asset you will get a profit, so on that profit the capital gain tax will arise, and on that you have to pay the tax. Okay, now only 2 type of capital asset are available in India. First is short term capital asset. If you are purchasing some capital asset and if you hold it for a period of less than 36 months, that is less than 3 years for in case of immovable property, and after within 36 months if you are selling that asset, then any capital gain arises will be considered as or will be termed as short term capital asset. But in case of shares, mutual fund, bond, etc., other than immovable property asset, if you are holding for a period of less than 1 year, that is 12 months, then short term capital gain will be arise. So a period is bifurcated into 2, movable property and immovable property. For immovable property, short term capital gain 36 months is considered, and for movable property like stocks, mutual fund, vehicle, jewelry, etc., less than 12 months is counted for short term capital gain. And opposite to this, long term, if we are purchasing any asset and selling it after a period of 36 months or 12 months, whatever you are holding as the case may be, and the gain arising on sale of such asset will be termed as long term capital asset. Now how the calculation happen for capital gain purpose? Now first you will put it sale consideration. Whatever money you get after selling your asset will be considered here. Then any expense you incur on sale of asset, like if you are selling asset, then selling asset and you are incurring any expenses like stamp duty or registration, etc., whatever, then insurance payment, etc., that you will deduct, and net sale consideration counted for capital gain purpose. Then in that you will deduct the cost of acquisition, means at the time of purchase whatever amount you have paid, that will be deducted here, and cost of improvement, if any subsequent expense you have incurred. For example, if you are buying house property and if you are doing any renovation, that is subsequent expense, you will also get deduction of that. And finally you will get capital gain, net sale consideration. In that you will minus cost of acquisition and cost of improvement, and after that you will get final net figure as capital gain. That will be depending upon your holding period. It can be a short term or long term. If you are holding for long term, then it is long term. If you are holding for less than 36 months or 12 months, whatever the case, then it will be short term capital gain. Now we will discuss the taxation of capital gain. First we will discuss the long term capital gain. In this there is only two possibilities there. First, shares and equity mutual fund taxation is divided into two, and other than shares and equity mutual fund. Okay, debt mutual fund does not cover here. Debt mutual fund cover in second part, other than shares and equity mutual. Okay, first, if you are selling shares and equity mutual fund, and in that you are getting a profit, and that profit is rupees 1 lakh, the government is saying that you don't have to pay any tax, it will be tax free. Okay, and if you are selling any shares or equity mutual fund, if you are getting more than 1 lakh rupees, then 10% tax you have to pay in balance amount. That is, if you are getting profit of rupees 1,50,000 rupees, so up to 1 lakh it is tax free, but balance 1,50,000 minus 1 lakh rupees, so 50,000 pay, you have to pay the 10% tax, which comes to rupees 5,000 rupees. Okay, now second, other than shares and equity mutual fund, like immovable property like land, building, property, gold, jewelry, debt mutual fund, vehicle, etc. If you are selling that kind of asset, then government is saying just you have to pay flat 20% tax. This is applicable only for long term capital gain. Now we will move to the short term capital gain. Now in case of shares and equity mutual fund, flat 15% you have to pay. Whatever will be your gain, you have to pay. You have to derive the capital gain as per our calculation which you have discussed. On that capital gain you have to flat pay 15% tax. Okay, and finally, on other than shares and equity mutual fund, in this initial video we have discussed the slab rate. So on that basis you have to pay the slab rate. If you are coming in the slab rate of 5 lakh, then 5 lakh mein what is the rate? 20%, then you have to pay 20%. If you are coming into the slab rate of 30 lakh, then whatever will be the tax you have to pay. As per the slab rate you have to pay the tax. Here it is slab rate applicable, otherwise in overall capital gain slab rate is not applicable. Flat rate or some other way the capital gain is charged by the government. Now it is a summary of capital gain tax which we have already discussed, so I am just briefing it. Type of capital asset, if it is shares and equity mutual fund and it is short term, then 50%, 15% long term capital gain hai, then 10% lagega if you have more than 1 lakh rupees capital gain. And in case other than shares and equity mutual fund, then it will be as per individual's income tax bracket, and in case long term capital gain, then flat 20% will be applicable. If you feel that video is useful to you, then please do like our video and please subscribe to our channel FINOMENT if you have still not subscribed it, and press the bell button so that you will get the notifications for the next videos. And also please comment it in the comment box on which topic you want to watch the next videos.